Hi everybody, welcome to Deep Practice for August 18th, 2016. We're going to just get right into this. Good to see everyone here tonight. And Will says he was in Germany, in Berlin and Frankfurt, and got a chance to go to the Eurex exchange. Said it was an amazing place. Yeah, I remember. I've never gone to any of the foreign markets exchanges. I've been in China and several times, as most of you probably know, and would often go, especially in Shanghai. I was there a couple of times, and walking along the streets, people were spilling out of what looked to me like a brokerage office with the ticker tape, going across. It looked like the 1920s or the 1930s, or maybe a little bit later, maybe the 40s or 50s, with the ticker tape and people standing around and placing trades and watching the market and stuff. It really that was maybe 4 or 5 years ago that I was in Shanghai and saw that. Excuse me. But I thought that was pretty interesting. But cool that you got a chance to go there. It's always fun to go and see some of the exchanges. Well, I used to work down on Wall Street, Rector Street actually, and would often the American Exchange was there, and of course the New York Stock Exchange was there as well. And mostly now it's there's not as much floor traders as there was back in the day. In fact, there are very few now, if any, left. But years ago, it would the streets would be crowded when they left for lunch or when they left for the day, and you could go into the exchange. It was a little bit different than it was after 9/11. Everything changed in terms of security. Prior to that, you could go in and go up into the gallery at the New York Stock Exchange and see the crowds of traders trading the stocks and stuff off of the exchange, or go over to the American Exchange, which was smaller, and see the same thing. Today it's all different. It's all electronic, but cool. All right, so tonight, here's the agenda. We're going to take a look at day trading tonight. We'll look at the daily chart. We'll look at the 30-minute chart again. We started that a few weeks ago. It's not a bad chart to look at. I prefer the hourly, but the 30-minute is fine too. So I thought I would just do that for a couple of sessions. And if you want, if you prefer to have a little bit more fine-grained data for your higher intraday time frame, then the 30-minute would be a really good choice. And then we'll take a look at the current market. All right, so here's a daily chart. What do you see? What do you notice? And what should be our game plan for tomorrow when we day trade this? How would we think about this? While you're doing that, I'm going to close the door. Helen's got the Olympics on, and the dogs are fighting upstairs, and it's noisy, so I'll close it so I can hear. And Howard says it looks overbought. Okay, that could be. Why would you say it looks overbought? And what would you want to try to do for tomorrow? Top of a trend channel. Well, we may not have enough data for a real trend channel here. assume you're thinking that, I don't know if this is, assuming you're thinking of something like this, but I don't know what's down below that. I think, in fact, it's higher prices down there. So a trend, you may be right about that, but that also, we don't really have enough data, so I would say that that would be a little suspect. Okay. Reverse use of trend line, well, but that wouldn't give you overbought. A reverse use of trend line would look like this, and then you would draw a parallel here. That really doesn't give you overbought. You're assuming that this is a swing high and that the market will go down from there to be able to use a reverse use of trend line. Typically, when we use a reverse use of trend line, we would have two good swing highs in place to be able to use that. If you were drawing something like this, that really, these are not really two swing highs. That wouldn't be a good reverse use of trend line. Okay, let's see, a couple of other. Alex says, looks like a shakeout 8 days ago, and that would be down here, and that would be correct. We have a swift move down followed by a swift move up, so it shakes out, and no follow through. And then a nice up move. Yeah, what happened was you got that shakeout, right? It's very volatile, maybe driven by news. We don't really know, but we get that ordinary shakeout here. It dips just under the support level of this point, or actually quite a bit under the support level. Rallies up, and then it tests in here. This would be testing, looking for any additional supply. You had supply on this bar. I'll label that bar 1. You also had some supply on bar 2. I mean, that's a lot of volume coming in there compared to the volume. I mean, this is your average. That's actually higher than average. Your average volume is probably about like this beforehand. So you're double the average volume on these two bars at least. And so typically when we get high volume on bars, particularly the bars that go up, but also the bars that come down too, we will have some testing occur. And these did test in here, and you can see that the volume is much lighter. Volume is higher here, but I almost guarantee you that the volume down below in this area here would have been very low. Would have been down in this area, this level, and then buying drove price up. In other words, they didn't find any supply dipping down into here, back into the middle of that high volume up move, or this high volume shakeout and up move. And so this was a good solid test of that, and then that allowed the market to drive up. So so Alex continues on here, then a nice move up. Would like to see what will happen around 1685 to go long, perhaps. Yeah, if we were swing trading this, definitely. We would draw a line across here, and 85 would be a little bit lower than that. That would be fine. That would be a test of this high volume bar here, or vertical acceleration bar. And yeah, so we would, that might take maybe only 1 day, maybe 2 or 3 days to come down, or 4 days, come down in this area. And if it gives us indications that the down move is stopping here, if that happens, then we would be looking to buy in this area here. So on a swing basis, that would be great. Let's see what sorry, I'm a little, Dean says here, supply burned up mid-chart, price rose on less volume, was shortening the thrust in the price bars. No demand bar yesterday. Up here, no demand. and we can see that. We're rising up, but look at the volume, gets very light here. Indicates no demand up there. Buyers are still pushing the market up, but they're not anywhere near as aggressive as they were on these couple of bars, and not even as aggressive on this. And we're starting to see shortening of the thrust and the price action in here. And then supply turned up on this bar. We see that clearly, right? We can see that we tried to go higher than yesterday's high, couldn't hold it, and we come down and volume expands. And volume expands to the downside. Most likely, we see this on an intraday chart, light volume up in here, down like this level here, give or take. Sellers saw that buyers, they could see the day before that buyers were tiring out, and it was just too much for them up above yesterday's high, and so then they started selling it down aggressively, and that's where the volume came in. Okay. So expect price to test yesterday's high or yesterday's close, perhaps so, noting volume and price action at those levels. Yeah, that would be a good start, right? Yesterday's high, we would look at if price comes back up in there and the volume is still relatively low at this point, we would look to go short if it gets up there, okay? Dan says outside bar. Very good, Dan, very good. Outside bar and closing down off the low and closer to the middle. Volume is above average, possible test the bottom of the last bar and then head north for a long. Okay. Now, Dan may know something about outside bars that other folks don't know. When we have an outside bar like this, very frequently we'll see the market not have follow through to the downside. Sometimes we do, but probably just as frequently we see that there, or maybe even more frequently, we see that there's no follow through to the downside. And we see yesterday is an outside bar, and it also closes up above yesterday's low and above the 2-day high back in here. So there was some buying that came in during the afternoon session, sort of late in the day. It wasn't all selling. So given that kind of configuration, we would expect maybe a little bit more of a drive up before additional selling comes in. We'll have to see what happens on the intraday. Good comments there, Dan. Will says, slightly parabolic up move. Yep. Shortening of the thrust. See supply enter for the first time in the uptrend. Expect some kind of pullback. Would like to see how it opens. Either a weak rally up and see how it reacts near yesterday's low, or perhaps a test of yesterday's low first. Good, good. Yeah, we would frame this out, especially an outside bar. We want to frame out definitely the yesterday's high and low, and watch carefully the price action around those levels. They're going to be key if the market gets there. Right? It may or may not. We don't really know until we start looking at the intraday charts. Edmund says, after a back and forth shakeout bar in the middle of the chart finally broke out as price breaks, the volume gets lower with shortening of the thrust. The last bar tries to break the high, presumably with no demand, then breaks below the low of the previous day bar, only to close above the low of the previous bar. I expect some strength in the morning, followed by weakness. Very clever on Edmund's part. Understands a little bit about market action. If the market's going to be sold down, odds are it's going to, unless it's really weak and then they just drop it down, odds are they're going to try to bring it up, maybe test yesterday's high somewhere up in here, to get some contracts sold at higher prices. So the market can then, shake to absorb any of the buyers that remain, and then take the market down. That's typical action in any market, but in particular this market, which happens to be the S&Ps. Now may go down to test 1700 or to 1690 and then move up. It could. We could see this market just drive right back down to 1690 or so, and then, if it starts doing that, and we start seeing volume coming in, we want to pay attention to yesterday's low and short against that if that gives us a chance. There'd be other short opportunities in here. And then 1690, 1685, maybe, yeah, somewhere in here. 85 may be a little low, but you never know. Somewhere in here, the market is likely to find support, and we would be looking for a long opportunity at that point. Good basic analysis there. Whoops. Can you discuss the high volume bar in situations where you might expect the market to continue up a bit more? Can I discuss the high volume bar in situations where I would expect the market to continue up? Well, yeah, certainly on shakeouts like this, you would, right? If the market this market looks like it's been coming up, we don't know exactly because we don't have that much data, but at least from what we can see here, it was coming up, and we do get that shakeout and then an immediate reversal back up. So this would be one situation where I would anticipate a high volume bar having continued follow through to the upside. That's one situation. So a shakeout, okay, an ordinary shakeout. An ordinary shakeout as opposed to a terminal shakeout. But a terminal shakeout, you would still see high volume and you would expect follow through as well. So on a terminal shakeout, you would expect that too. We don't see too many terminal shakeouts occur. You see them more in stocks, but not on the indices. You would expect, so that's one situation, or two situations if you want. Another situation is here where we get a breakout, okay? A good solid breakout or a jump across the creek, whatever you want to call it, where you get a nice firm close, widespread bar up, and good volume, okay? Even more volume than this would be fine. If we had all that kind of volume on there, I would feel comfortable with that. That, again, you would anticipate follow through. Okay. Oh, the high volume down bar specifically. Okay. Sorry. So, high volume bar. Can you discuss the high volume bar in situations where you might expect the market to continue up a bit more? High volume down bar specifically. So on this chart, what are you talking about? Which bar? Are you talking about this bar? High volume down bar and then expect it to continue up? Or continue down? Or what are we talking about? I'm not quite following that. The last bar. Okay. If it closed really poor. I mean, the only thing that makes me be a little cautious to the downside completely is two things: outside bar and the close. Some buying did come in, and we have a lot of volume. How come that market just didn't close on its low or go lower on that volume? You know, by rights, if it was all selling, it would go. It would have this amount here down to here. Maybe that's a little high. Maybe down into here somewhere. It would close over here if that were all selling, but it didn't happen. Right? We get buying up in here, and the fact that it's an outside bar. So if we saw this with good volume and it closes negative, then you would definitely be looking for follow through the next day. Toby Crable called that a sort of hook type bar, where the market's going up and then you get that down bar here like this. That sort of hook kind of thing. Then you would expect follow through for the next couple of days to the downside. Is that what you wanted me to address? If it's an outside bar, it makes us think up or down. Well, if it's an outside bar and it closes off the low, yeah, that there was more churning there. I think, it would be pretty clear that this market went up. It failed to go higher. I'm sure light volume. We can take a look at that day. Then it comes down, and then somehow it finds support down here, and it rallies back up a bit off the lows. So it says that and there are buyers in here. We can see that. This market is dominated by buying. So, and buyers came in here. So this might not be a pure selling situation. We might see more testing action going on. Yeah, that's what I would say. We might see more testing action going on. It's just a typical observation where when we have an outside bar, a lot of times there's not follow through in the direction of the close. So for example, here's an outside bar. Just take a couple, right? Here's the first bar, there's the outside bar. We don't really get that much follow through. Yeah, we do a little bit, but not too much, right? Not an outside. Here's an outside bar. That's a big outside bar with a lot of volume, and we don't get follow through the next day. Here is an outside bar, again, but the context is breaking out of a trading range, and so we do get follow through the next day. So you can't just, I emphasize this all the time, you can't just say, okay, an outside bar, and therefore we're not going to get any follow through. You have to look at the context, always looking at the context of the market structure and background, and then the price action and volume to be able to really kind of think through. And again, you're not going to be able to say, okay, this market is definitely going to go up, or this market tomorrow is definitely going to go down. We can anticipate a weak rally up will find supply and will push the market down. We can also anticipate that since yesterday buying came in off of the lows and it closes above yesterday's low, that we might see some buying come back in again here tomorrow. There might still be buyers hanging around, and so we would be watching for that. We'd be alert to that, okay? But clearly what this market is strong up with supply coming in. There's no question that supply has come in. I don't anticipate this market, just bopping off and going higher. Could it happen? Sure, but is it likely? No. No, because of the context. The context being no demand, a bit overbought here because we're up 1, 2, 3 days in a row, right? We've talked about that. 3, 4 days up is generally about as far as the market will typically go on one run before it has to pause and come back. And then usually you get a couple of days pause and a good run up. So we've got that bit of overbought, we've got no demand, and we have some obvious selling coming in. So we would expect the market to try to come down a little bit lower to find buyers again, okay? They did find some buyers on this on the lows here. Is that enough? Well, we don't know. It might be to push the market back up again, but unlikely because we are overbought and do have that no demand. We need to probably go lower before we find ample buyers again, enough to drive the market back up and suck out the existence of whatever supply exists there. So does that help? I'm not sure. I'm turning in buyers. Yeah, okay, good. if it's outside, that makes us think up or down. Yeah, and it can often wrong foot us. So we have to look at the context. Okay, so any other questions on this? We've kind of beaten this into submission, I suspect. Okay, so just before we get off the PowerPoint here, we're on schedule for next week, next Thursday, usual time, August 25th. I know we've been sort of all over the lot the last couple of weeks because of vacations and stuff. All right. So here we are, coming into the market at just about 9 o'clock, a little bit before 9 o'clock in the morning. This is the 5-minute chart here. And as I said before, we're going to look at a 30-minute chart. And then we also have our daily chart. And this is the data that we have on the daily to just before 9 o'clock in the morning in the S&Ps. So you can see in the overnight action, we didn't do much trading, did we? And let's just expand this out a little bit. And let's just focus on the overnight here. We can put in the overnight high here. This 16.99, I think I had it on this, right? Yeah. So the high and low of yesterday, the high was 17.14 up here, and the low of yesterday was 16.99. Okay. So I just made it easy for us and transferred that onto, there's yesterday's low right in here, and also on the 5-minute chart. And then yesterday's high is on both charts too, but I'm not gonna move them. It's off the chart, off the data of the chart. So Richard says, sorry, late question. No worries. Is there a distinction between no demand and no demand bar? The latter you have described as having weakness in the background, usually narrow and with low volume. Yeah, okay, that's a good question. And it can be confusing, the way we use it. Let's go back to this. So would that be classified as a no demand bar? Well, technically, yes, it would be. And what technically would a no demand bar look like? Well, it would be an up bar with volume less than the previous few bars. You could use the last couple of bars as a rule of thumb. That's what Tom Williams uses. And by the way, this is Tom Williams's idea, a no demand bar. Now, he specifies a bar because he was writing a computer program called volume spread analysis, originally called Wyckoff volume spread analysis, trying to computerize the Wyckoff method. And he used bars to do that. And he's been quite successful at it as well. So would this technically qualify as a no demand bar? It's got some of the characteristics to it, but really a no demand bar should have, 3 or 4 characteristics. One is a narrow range, should be a narrow range bar. What we're looking for is no demand, no activity, okay? And the range specifies activity. Obviously, a lot of activity on this bar, lots of activity on this bar and this bar, right? the wider the spread or the wider the range, the more buying and selling activity existed, the more trading activity, obviously. So what we're looking for is no activity. And that comes in the form of in the form of range. So we're looking for a narrow range, and the second thing we're looking for is low volume. That's also an indication of activity. So we're looking for both of these things. Okay? This bar really doesn't have narrow range. Okay? It really doesn't have narrow range. We're also looking for, but it does have low volume. We're also looking for an up bar. Has to close up above the prior bar, right? Because if it's closing down, then it's a little confusing. Is it buyers or sellers? Preferably, it is an inside bar. We're just talking about an outside bar. If we saw a bar that looked like this, that comes into play here. And has low volume. We would call that a no demand bar, an NDB. So that would be a no demand bar, okay? Why do we make the distinction? Well, because in a no demand bar, you can sell it on the close, you can short sell it under the close, or if the market, the way Toby Crable would do it, he would look for the market to go up through it and then come back down again and short it as it's coming back through the high. A lot of different ways to play that, but this is a trigger for a sale, a short sale, okay? So on this, we don't really have a no demand bar. It's not an inside bar, so we don't get that. It is an up bar. It does have low volume, but it is not narrow range. Oh, there's one other characteristic that we like to see. Not only is it an up bar, but it closes off the high. Okay, so the close is less than the high, preferably in the middle. Okay, preferably in the middle. You can have one that you know, you get like this bar here shows some supply, and the next bar might be an up bar that closes on the high. That's okay if it's a narrow range, but much better if it's in the middle, right? If it's off the high. Or you could also get one that is higher than the last close but closes on the low. That's nice too. Okay. Well, we typically like to see the close off the high, and the closer to the middle or to the low, the better. Okay, in general. So this doesn't quite close off the high, right? It's still in the upper third. It's not the greatest. However, so it's not really a no demand bar. Okay, that's the point I'm trying to make. It's not a no demand bar that's jumping out at us. What it is saying to us, however, is that demand is tiring out up there. Okay, maybe there's a better way to say it than no demand, but that seems to be the best descriptor I can think of. Buyers are getting tired out. Buyers are getting exhausted. They're not chasing the market up as strongly as they were, and we're seeing it primarily in the volume. And we're seeing a little bit of shortening of the thrust as well. Here's a little bit better example. This bar right here. Okay. We have an up bar. We have narrow range. We have very low volume. We have a close pretty much off the high, and it's underneath the high of the prior bar. The only thing we don't really have is an inside bar. Okay? But again, it shows that no demand. It shows lack of activity to the upside. I mean, that's a very clear indication right there, lack of activity. This is very clear. This is just a sort of indication that we're seeing a lack of buying up at the highs here, and to be alert to something coming in tomorrow to the downside. Okay, comments here. Because the market is fractal, everything true about waves should be true about bars, which are really waves on a higher time frame. That's true, generally true, yes. Is it no demand, but Tom's VSA no demand I generally use after a sign of weakness, like an up thrust or into a vertical acceleration down bar. Resistance is very contextual for me anyhow. Yeah, if you're using a no demand bar, do it in the context after a sign of weakness. Absolutely. Okay, so here we see a sign of weakness, right? And then we have a no demand bar. Then you got a pretty good indication that the market's gonna head south. Okay. Here we're using it as an early warning. This bar suggests that buyers are tiring out. The context is good for it because we've been moving up. But, think about it this way. Buyers only have so many bullets to shoot, right, before they have to reload. And so at this point, it's getting clear that they don't have many bullets left. They've shot their wad, so to speak. So we're looking, the market could still go higher for another day or two, but this is telling us that they're getting weak. By this point, if we had this bar in here, as a true no demand bar, if we had this in here, right, as a true no demand, then we have the preliminary warning here on this bar where there's lack of demand. We have selling coming in, and then we have a clear inability for the buyers to rally the market up. And now we definitely are looking for the market to go south on its next move. Okay, does that help all of this explanation? Does that help you guys with this? Or did I make it even more confused than you already were? Okay, good, clear, great. Okay. Yeah, Tom did some nice stuff with the VSA software, but don't get hung up on that. We also want to look at the market in context, and that's important, and to try to be able to read the market as it's going up. Okay, so here we are. How do we frame this market out? Do we want to do anything here? We have. What do you see here on the 30-minute? Forget the 5-minute and the daily now for the moment. You got yesterday's low end, yesterday's high is higher up here. How do we frame this hourly overnight action? Choppy down move without much follow through down yet. Yeah, that's the first big clue, right? This is not moving down with any kind of alacrity. It's coming down here and it's kind of bouncing off of yesterday's low. That's the first clue we've got here, right? Looks like it's trying to hold at yesterday's low. So anticipate a rally off this level with the possibility that it then makes highs first after the U.S. Open. So we judge the character of whatever the rally may occur. Right. That's what we're thinking about. And maybe there'll be an opportunity for us to get long. We're still 30, 40 minutes out from the market open. Might not be a bad idea to wait for that on days like this, because if they are going to take it up, they're going to come down first, and if they're going to take it down, they're going to go up first and then come down, typically, unless there's just tremendous strength or tremendous weakness. Sherry says possible spring on the 30-minute daily bar is close to its lows. Pullback price bar on 5-minute chart, price is close to support. I would be thinking of going long. Okay. Scott says shortening of the thrust. Yeah, That's pretty straightforward, right? We're pretty clear. We've got some shortening of the thrust right in here. So we would pay attention to that, right? We got that shortening of the thrust. And the down waves would be shortening, that's right. Shortening of the thrust on 30 minutes as well. Some good flow to the downside. Not a lot of flow, a little bit here, but it dies out, right? We have flow, good flow to the downside, but here we're seeing support come in and holding. So we have to be aware of that. Price action is now rounding under bottom reversal at yesterday's low. Yep. Up move is very choppy as well. Yeah, so deep pullbacks as well, says Dan. Deep pullback. Yeah, there's a pullback, a deeper pullback. Yeah, I guess I would agree with that. Although we've got shortening of the thrust in here, so it's what do I have here on this pen? So when I would do this, I would frame out and just put in yesterday's. I don't need the hold to do it like that, do I? I would just frame out the overnight high here. That can be important at times. Okay, just be aware that we've got the overnight high there. So we're expecting a rally of some sort. Yeah. And so where might that rally go to? The overnight high. Yeah, that would make the most sense, right? Because look, you've got this bit of resistance in here that the market's tested. Okay, here's another way to think about support and resistance. Yeah, overnight high or two-day high. Well, overnight high is the first line of resistance anyway. So notice this. This is useful to know. We have a support level here. Market goes up. It fails at this point. Okay, right? We come down, pushes down through, tries to go back up above it, and now but it can't. Okay, and so it comes down. But look at what's happening. The market's caught between this resistance and this support. Okay, this was support before, so it's being caught now between this level and this level. And which do you think is going to win? Probably the daily. We've been down here 3 times and haven't been able to do that yet, unless we start coming down through it again. So most likely we're going to break this resistance here. So this resistance is likely to be weak resistance, and this support is likely to be strong support. Simply because we've got shortening of the thrust, we've been down here a few times, and we're not too far away from breaking this other resistance if we're going to go push, if we get up to that level and push through. And so therefore, what we're looking for is to come back up to the overnight high. This resistance we can kind of ignore. In this context, that doesn't mean every time we see something like this that we want to ignore it. If we were just bouncing off of this, right, the first time here, and we came, whoops, and we, let's, if we didn't come down quite this far and we were bouncing off this the first time, then that might hold. We might expect to see an up thrust there, but it's less likely when you got shortening of the thrust like this. 1705, yep, if it gets there, 3 pushes down, yeah, another way to see the shortening of the thrust there. Okay, so let's start walking through this and see how this all unfolds for us. So we get a push up. Let me get up to 702 here. Still not at the US Open yet. Comes up into that resistance. just about a half an hour out here from the and this resistance is proven to be a little bit stronger than what we anticipated, isn't it? Look at that. Interesting. But not that strong. Hang on a sec. So no real trade in here as of yet. Notice where we are on the daily, almost at yesterday's high, right? I'm sorry, yesterday's close. And again, we see that shortening of the thrust in here. So we've got about another 5 or 6 minutes for the open to occur here. What do you expect here to happen? You want to go long? What do we expect to happen next here? Support should hold, good trade location, okay. We're a minute away from 9:30. We're a minute away from the US Open. Anticipating the former resistance to hold for a good rally. Okay, another leg higher. All right. Any contrary opinions? Let's see what happens. I'm expecting a shakeout. Can't go higher, says Edmund. Yeah. Ah, Dean, you got it. 30-minute doesn't look too good for a long. We're 1 minute away from the 30-minute bar closing here. Okay. So actually, this bar will close. I don't know what it does. I forget if it closes on the 30 or if it's the 29th, and then we start a new bar. But that's the key thing here. Look at the 30-minute chart. Let's look at this a little bit. Yeah, it looks like a key reversal on the 30-minute, but there's more to it than that. You have the up thrust. Well, yeah, there's even more to it than that. As the market opens, anything can happen. Well, yes, anything can happen, but we also have, we can also have a position on just before the open if we're positioned correctly. And Dean says there's a supply to the left. If we were to look at this 30-minute bar and we go to the left, what do we see there? We see supply to the left, right? Selling occurred on these couple of bars down here, right? A wide range bar, yeah, but it was selling that came in, okay? And it continued down. So we know that there was supply there. Even though it's in the overnight and it's light volume, it's still going to have an impact. We come back up into this area and we get selling coming back in. So supply. This market has a very good chance of going down despite the fact that we're sitting on top of 5-minute support. So let's hold that long position and see what happens. Let's see what happens with it. Okay, now we're about to open. There we go. Here's the US Open. Okay. That long was looking good until this minute. Okay, this is now the finish of that 5-minute bar. So you're long here. What would you do? You'd have cut it on the 30-minute. Okay, right. But now, what do you see? Yeah, you want to reverse it and go short. Okay. So the point being is that even when you are wrong, sometimes you can, you can also get out gracefully if you're keep your head about you. You wonder why it hasn't taken off. Right. Well, if this was real support, this should have taken off, right? It should drive up, but it hasn't yet. And we're still flirting around yesterday's low. So let's see what happens with this. Well, that was the right choice. You don't get the 30-minute bar. This 30-minute bar here, you don't get that? There's no selling up in there. There was supply because of the supply over here. What do you mean too late? I'm not sure I understand too late. Oh, you didn't get the 30, you didn't see the 30-minute bar until too late. Is that what you're saying? Yeah, the 5 minute. No, it was up and 5 minute was down. Yeah, I understand. Sometimes this software isn't quite perfect. It's close to being perfect, but sometimes it's not quite perfect, and it sometimes is off a little bit. I don't know why that is, but that sometimes it happens. If that widespread down bar was a gap down instead of a widespread down bar, would we expect selling when price goes up into it? This here, if it was a gap down, it's not, and it wouldn't be because it's in the middle of the active trading. The only time gaps are going to really occur in the S&Ps is on the 30-minute chart. If this was a gap down, still, the only time you're going to see that really is going to be Sunday night when the market opens. Sometimes there'll be gaps. If it was a gap down, would we in this context, yeah, you would still expect supply. You definitely expect supply because it's got good volume and it's going down. Okay, so let's finish this out here. Let's see what happens. Now, what are we expecting as we come down in here? Some support. Yesterday's low to break, maybe. Okay, breakthrough. Let's see if it does. So we've got yesterday's low there, right? And we have this low in here and down there. Let's see what happens with this. Whoops. So here we are right here. Let's pause here for a second. What do you see? Edmund thinks support might hold. Does anybody else think support might hold? Out yesterday, low is holding. Potential spring. And not much supply. Huge supply on the 30-minute. Well, that's because the market just opens, right? This is the first bar on the 30-minute chart. So we're always going to see that. It's a little bit harder to kind of make sense of the first 30 minutes or so of the day. Possible spring. Is the 30-minute giving us any clues as to what might happen? Climactic action? Yeah, maybe some. It's an outside bar. Yeah, it is. But that's not going to play here. It's off the low, so we anticipate a bounce, right? Just from the 30-minute chart, I think it will go down further, says Edmund. Okay, I won't torture you anymore. Look what we have here. We have potential shortening of the thrust setting up again here, right? .30-minute chart making net progress to the downside, bouncing off trend channel. Yeah, so we have a trend line in here for shortening of the thrust. Okay, so let's see what happens with this. Is it going to break, or look at your 5-minute chart now? What is this telling us? Yesterday's low is holding. Okay, demand is coming in. Close moving up as volume increases. Yep, there's a spring. So we're right at yesterday's low. Actually, see, this is a little bit behind. These two are a little bit behind the 30-minute and the daily. But if this holds in here, then we're at a daily low. So what do we want to do about liquidate the short? Do we want to go? Yeah, you got to liquidate the short. Do you want to go long and reverse? I sure would. A spring is a spring, right? You got a pretty good uptrend. You had buying off of yesterday's low, and we're back down there. We've seen no ability to go down below it, and we have a large move here. Not really that large of a move. It's only 4.5, 5 points, 6 points here, and it may fail on us, but it's worth a shot. It's worth a shot. Let's see what happens. Oh, the other thing I would say is we don't have a lot of volume on the 5-minute waves, do we? Not a tremendous amount for the market just opening. Ah, there we go. Now, where would we expect this to go to? What's our target? Yeah, 1705.5, give or take. At least that we would expect to drive through. So now, how does the 30-minute chart look now for us? Pretty strong, right? And the daily is looking decently strong as well. Notice what the market wants to do. Come back in and test that level. Let's go back for a second. Notice that there's no supply on that. And then it drives up. Test it again and again and drive up again, finding no supply down there each time it went down. Even on a 5-minute chart, there will be little tests and things like that. And it helps to think in those terms, even on the smaller time frame. Think in real life it would be extremely hard to go long at that point. Why is that? Why would it be so hard to go long? Why would it be so hard to go long? First 30-minute action, the volatility is high and it was pointed down. But you had all of this, and you have yesterday's low right there. And then you have this kind of bar here, right? You have all the makings of a good Wyckoff story. Shortening of the thrust, holding a trend line. This is a good reverse use of trend line here, by the way. And it's holding at that point. Low volume on that wave down. Buying off the low here. And certainly buying here. Failure to go down lower, failure to follow through, and a spring. You know, if you get stopped out, you get stopped out, but that has enough going for it to make a trade. Every time I trade, it's hard. Yeah, I know, it is hard. It's a tough business. You have to go against your normal thinking patterns. Where would I enter? Right on the close of that. That's where you would enter. Look, your danger point is just below the low here. You know, this is not a huge risk here. Let's take a look at this. It's 99 1/4 we would get in, and our stop is at 97 3/4, or 97 3/4, so call it 97 1/4. So that's 2 points we would be risking here. And I would put it down a little bit lower, but you've got, you know, you can jam it up tighter, 2-point stop in case it comes down again, because there is some volatility. It turned out it didn't. We typically see this, by the way, in the S&Ps, where you get a swift move and then it reverses quickly. And why does it do this? It does this to flush out the weak holders. All the other traders who are thinking it's going to go lower, and they're piling on. Let's go back and do this properly. Okay, look at the volume here. Watch the volume expand. It'll be on this bar, okay? First, we get a small pickup in volume when we go this low. Now watch what happens with that volume. It expands because people are pushing it down. They're getting short in here. And watch what happens now. It expands again, but buyers are coming in and overwhelming it, right? But there's still sellers selling that. More sellers, and then buyers. But a lot of that volume is smarter money buying in and holding that market and acquiring those contracts because they know it's going to go higher. They want to push it higher. Okay? Yesterday's daily suggested there was support from yesterday's low as well. Yeah, because of the close off the bottom. I mean, that was a nice clue. That's right. It would only be cost a couple of points if proved wrong, so it would be worth it. Right. So in real life, it is hard. It's difficult to do. But if you have this racked up for you, all lined up, then you want to take the trade, you know, and you want to risk it. You're not going to be right all the time, but the times that you are right are going to be pretty good. You get a pretty good move out of it because everybody else is wrong-footed over there. And you can see that, well, it's hard to see on this because it's the Weiss wave, but there's not much volume on that. And the next bar starts to rally up. And now everybody wants to jump in. And it's just volatility that we're trading here. But a lot of times the volatility is great because there is so many traders get wrong-footed on that volatility. With NinjaTrader, the most recent price bar I get volume for is the previous price bar. I have to wait until the current bar closes to see the volume. Oh, that's not good for this type of analysis. Don't they have Zenfire or something like that that is supposed to be good data? Okay, so now we're coming into that top there. Do you think it's gonna die there, or is it gonna go higher? What do you think? Just given where we are now, is this likely to stop around 1705 and a half, 1706, somewhere's in there, or is it likely to push through? Looking good for higher prices, right? Yeah. Higher or lower prices have been higher because lower prices have been rejected 4 times, right? We have all this behind us. There's enough cause in there to drive the market up higher. Likely to stop after a poke through. Well, let's see what happens. Let's see what happens. Drives up and through. Having some difficulties there with it. Look at the volume here. And now it pushes on up and through. Notice the volume, right? Good, strong volume. And that's what we want to keep our eye on as we go higher. It's a very good clue. What are you noticing here? It's struggling, isn't it? Yeah, it's struggling. No ease of movement. So, we're long from in here. Do we want to hold it or do we want to get rid of it? Pitch it out. Cut it. Yeah, it's probably a good idea to take profits. Okay? Should we go short in here? Not yet. Not yet. Too much demand still. Yeah, no for me as well. Right, I would agree with you. There's supply coming in, but there's a lot of demand in the volume here, and it probably isn't wise to go short at this point. Let's see what happens. Is it bouncing off of this? Well, it's roughly in there. That's a little bit of support, right? A little shelf of support, even though it's from the overnight or just before the US or just before the open. So it came back and tested down in there. And so we didn't get the full run of this, but that's okay, right? You got a piece of it. That's really what we're after, is trying to take a piece out of the market, out of the swing or out of the trend, not necessarily get every little bit, right? So what are we noticing in here? Closing off the high, possible shortening of the thrust, right? Volume is starting to pick up again. Well, we're not getting much volume here, right? Here's one of the ways to use the Weiss wave. The first 3 bars here brought the volume up to this point. First 3 bars here, it's about half that, okay? That's a useful way if it's not updating for you on every bar. And we had struggle in here to go up, and we see some supply coming in here and here, right? And now we're having difficulty going up as well. And so there's a little bit of an up, there's demand is dying, and there's a bit of an up thrust here. Sell stop the low of the last bar. You can do that. You can put that in here. It would be an aggressive short. Yep. So let's see what happens. We'll sell stop it if it comes down through. Let's see what happens. How about the fact that no supply yet either? Right, there is no supply there. There is no supply. That's right. So it is an aggressive short. Okay. This hasn't finished yet, Edmund. It's only two minutes into the bar here. Good no demand bar. Yeah. If we were trading off of the 2 or 3 minute chart, I would agree with you. Now you're stopped in here. Okay. So we're short in here. Right there. Why might this be the case, that this is dying in here? Probably should have looked at this a little bit earlier. My fault for not saying this, but obviously here's the sell-off yesterday. And in fact, there is some support. I didn't notice this earlier, but now we can see it right here from yesterday afternoon. And we would want to be looking at that more carefully than we did tonight, for sure. But that's yesterday's. There was a low point here yesterday in the middle of this breakdown. And so we're, again, back in the supply area of the sell-off the day before. Supply to the left, right. So let's continue this and see how this goes. So we might get a little rally in here coming into this support. Where's our line in the sand? Where do we not see a close? We don't want to see it close above. $17.07. Yeah, this level here. We watch this level, this line very closely. If it closes above that, we've got a good chance that it's going to break these highs. And so that would be an early warning to get out quickly. Okay. But notice the 30-minute chart, which just closed a moment or two ago. This does not look like it's going to rally very high. Okay, and if you were not short yet, here's a good spot to go short, right? Somewhere in here. As we come in, anywhere in here is good to short. Anywhere on these two bars here. Yeah, we'd short here too. Yeah, any in here is perfect to short. Okay, and you can see that we're not getting much of an up move here in terms of volume. We've got no demand here and even less demand in here. It's getting kind of swamped by supply. So let's see if it can break that support, and it does nicely. It does that. Now we can, because we're made a lower low, we can now put in a bit of a trend channel in here. And we're coming to the bottom of that trend channel. If this is an ABC, we would want to get out somewhere in here, right? But do you think this is going to be just an ABC, or is it going to be more to the downside? 30 minutes looks weak. I'm holding. Yep. The lunch hour is approaching. I would be thinking of taking profit soon. Well, it's only 11:15. We've got another 45 minutes before the lunch hour comes in. So more to the downside. No demand on the up waves. What about the down waves? Are they greater or less than the up waves? Some might go to lunch early at 11:30. Yeah, the guys who don't want to trade. The breakdown bar is too strong for an ABC. I would agree with that. And also we're breaking down support here. So it's not likely that we would be coming back up. But the down waves, in terms of volume, are much stronger than any of the up waves. And so, again, we'll watch this line in here, give or take. We don't want to see it get much above that. Last up wave was choppy. Yeah, I mean, look at the, right, that's right. Look at these very carefully. Look at the spreads coming down. Strong. Choppy, we can draw a line through, a very choppy, strong spread down, strong volume, weak volume in here. So most likely we're going to see more downside. So it's worth holding this trade for another leg or two if it gets going. We don't want to see it obviously jump across this, then that would be problematic. But it's not going to do that. That's what that's telling us. And again, the down wave, it's even bigger than before. So most likely we're going to get another push down until we start to see volume dry up to the downside, right? So we're short, we just sit on our hands and let the trade unfold. And here we go. Okay, so that's the end of this 5-minute bar. Would you keep the trade on or would you take it off at this point? At the up bar on the left, so be careful. Tight stop. Okay, but so is there anything on the chart that tells you that we want to hold this or take it off? Oversold in the channel and supply is decreasing. Weiss wave is still showing low volume to the upside. Yes, it is showing low volume to the upside, but the upside wave hasn't completed yet. This last down wave has completed, and it's showing very low volume. Okay? Brian says, take it off. Supply's dried up in the area of previous demand. Right. If we look to the left, our favorite thing to do, and we see the demand over there, see it? And now we don't have supply enough to drive through. This is a big loud bell clanging, saying to you, take the trade off. Okay, right here. Out near lunch. Yeah, supply would be drying up at this point, so there's not enough to drive it down and through. So let's see what happens with this now. Over the noon hour. By the way, what kind of a trading day do we have here? Now we've gone through the morning hour, the morning session. What kind of trading day do we have? I got a few. Yes, that's right. Range bound day, a rotational day, narrow range rotational, trading range, a range bound day. Exactly right. Exactly right. We bounced off of support. We came up into resistance. And now we're just kind of in the middle of the trading range. Okay? So testing and rejecting. That's right. And so knowing that, we can trade accordingly. We're not anticipating big breakouts one way or the other. Okay? So let's see what happens with this. So we broke back up above this little level here. Would anybody go long here? No, it wouldn't be worth it, right? It really wouldn't be worth it. Middle of the range in the noon hour, that's right. It wouldn't make any sense to do that. So now that we're driving up, we can put on, and we've got a little bit of a pullback, we can put in a trend channel here. By the way, if we're in the middle of a range-bound day, and especially in the middle of the noon hour, what kind of a wave are we looking for here? Weak rally to 1707, low volume, choppy. How does this look to you in here? This last wave up. looks weak, right? Yeah, possible shell divers tragedy, right? So, and we're also in the area of some supply over here, right in here, right? And it goes all the way back into here. So, if we're in a range-bound day, most of the time what we're going to see are ABC type waves, and especially counter waves to what we're anticipating. And we're anticipating more downside, or were from the daily. So this again is kind of aggressive, but not a bad play in here. We have a push up, and then no real follow through. So we could short this with a very tight stop just above, or if you want to wait until it breaks the trend line, you can do that too. But we've got an ABC here. Yeah, we can do ABCs. They're very simple. On range-bound days, around lunchtime, would you increase your position size? No, just the opposite. We're not in a... The time to increase your position size is when you got a good trend day going, or a good strong move in your, and you've just broken down off of a sideways line or up out of a sideways line, and there's a lot of cause behind you, and you've got you've got a good move. You've got a good move on. Then you can increase position size. But on a range-bound day, you trade your smallest position size because it's choppy and it flips back and forth all the time, and it's just not a great trading environment. I should have mentioned this before. You could take this trade in here. Here's a no demand. In here, narrow range, closes up, but closes in the middle. You've just broken the trend line, so you can trade that. That's not a big bit of risk there. What would make you lean away from the idea that it would not neck into an apex there? Because I never think about them, truthfully. If they go into an apex, then then they do, and I can usually get out gracefully if that happens. But I don't really think about apexes all that much. It's odd, I know, because Wyckoff talked about them a lot, but I just have never been very good at them, never been very good at seeing them, and try very hard not to anticipate them because of that. I mean, if they're really, I wait for them to be really obvious. Let's put it that way. I don't try to anticipate. Occasionally I do, and usually when I try to anticipate them, it turns around and bites me in the butt. Like, for example, you could your mind, if you're looking for something, your mind is going to find it for you. So you could say to yourself, okay, we're going to build an apex right in here. So the next part of this 30-minute is probably going to be an up move in here, right? I mean, that's how your mind would kind of work. At least my mind would work that way. And let's see what happens. I mean, this is telling you it's not going to build into an apex, but minds are a funny thing, right? And will tell you stuff that just is not true. Notice that, I should point this out, when we break from this level here, where it's a bit of an access line, and let's color it in as an access line. Give it a little more weight. as it breaks that, it accelerates. That's a characteristic of access lines, right? When we go through them, when we come down and test them, they're small range. When we go through them, sometimes we gap if that's a gapping market, but almost always, and you can see it here, we go through them with some drive. We drive through them, and we're driving through it here. Okay, and we drove through it here. But when we test, it's just the opposite. We test. We don't drive. Let me ask a slightly different way. What would make you look for follow-through to the downside on this down wave where the previous down leg failed to reach yesterday's low? By the fact that we didn't go all the way back up to yesterday's high and that we found resistance in here and had a deep pullback. So if yesterday's high was a point of real strength, then, you know, we should have come down here like this and then pushed up from there, right? And gone higher. But we didn't. We came deep back into this area. And also this notion that we've got, we don't go all the way back down to support. We could have, but typically on a range-bound day, this is why you trade smaller, because you might be thinking, okay, I'll take it off when we get down to 16.99 or 16.98, and then it doesn't come down there, right? You've got a resting stop in here to take you out, a limit order to take you out, not a stop. And you're not watching the market very carefully, and suddenly it's back up here, and you're losing money now, or you're back at break even almost. So what would make you look for a follow through to the downside on the downward where the previous? Yeah. Okay. So this is just characteristic of more of a range bound market than anything else, and it could go into an apex. I'm not saying it wouldn't. I just don't look for them because it's just my personal history with apexes. I thought they were really cool at one time, and I tried looking for them all over the place. And I found that I was not good at looking for them. So I really don't try to do that anymore. If the market turns into an apex, I'll notice that. You know, I mean, you can do this if you want to. You can put a line in and say, okay, it should do this. But look at the volume in here, right? Is that telling you that there's an apex forming? I don't think so. I wouldn't read it that way. I would be looking at it and saying there's more downside to come. Okay? But we could be wrong about that, so let's see how this trend line holds out. Okay? And so now look at what's happening here. We're on the other side, and now it's broken that line. So this line didn't work, right? But if you're looking for that apex, you'd be thinking, okay, this is gonna work, and you might have bought this. But you're buying against supply coming in, and it would be the wrong move. Okay. I don't know if that makes sense or not, if that answers your question. Okay, it does. Hopefully it does, or it helps. So now we're coming back down. I would have a line here for sure. Back down to this low. Let's see what it does here. So if it bounces up here on this, so here we are. Should we cut this trade and reverse, or should we stay with it, or should we just get out of the market altogether? Cover shorts in here, okay. Should we try to go long at this point? You tell me. What do you think? Get out, says Howard. Sharif wants to go long. Okay. I don't think it's worth it. It's too narrow, says Edmund. A tight stop. Well, you know, where's this market going to go if it's going to go? Continue to go down. I still have a problem with impulsive overtrading. Right, 16.99. And where are we now? At 17.01, right? So we're only a few points away from yesterday's low. So here's the way I would look at this. Let's go short here. Let's go long here, and then let's see what the market does, and we can talk about it afterwards. Okay? Let's see what happens here. We might make a lower high if it breaks. All right. So see what happened? We're going back down to here. All right. Let's back this up before we even get to this point, and let's talk this through. Why is this not a good spot to go long? First, we're in a point of prior buying, okay? Which is good. That's a plus. So we'll say that this is a plus. I don't see strong buying in here, right? Howard says strong volume on down wave. Yeah, that's a negative, right? To go long, in other words. It's a negative to go long. We don't have a lot of strong buying in here, so that's kind of a negative. We have some, but not strength in here. You would think that if this was still strong, we would get a strong response off of this, but we didn't really get that, okay? The other thing is we don't have an ABC here, right? And the market almost always goes in an ABC of some sort. You know, you got A, B, C here. Here you've got more than an ABC. You've got an ABC. You got a 5-wave thing down here, right? 1, 2, 3, 4, and 5. This is the Elliott wave kind of thing. Here's an ABC. Here we don't have that yet. This could just be the A with a B leg and then a C down here. In fact, it was so weak that it didn't even form a B. It just kind of formed a little B, but it just came right down. So when we're in this choppy kind of trading range, usually we see the pulse, pullback, pulse, pulse, pullback, pulse. All right, here we get a series of small pulses, but you almost always, it's very rare not to get that. So that ABC is useful in this kind of a context, okay? Yeah, it's just something to tuck away and remember. And this is, you know, also, the other thing that's a negative here is that while this is support, it's nowhere near as strong as this, okay? This is support plus, and this is minor support. We'd rather, and since we're so close to strong support, we'd want to stick with the strong support. We'd want to buy against the strong support, not the weak support, when strong support is right below us. You understand what I'm saying? The strong support is here on yesterday's low. This is higher up than yesterday's low. We took the trade off here because we were overbought from this short up here, but we didn't put a trade on. And part of the reason we didn't put a trade on is because we didn't know if it was going to come all the way back down here or not. It didn't, and it rallies up, gives us an ABC up. Now it comes back down, but we're only at minor support with strong support right underneath of us. So that's a real bad recipe to go long against. Does it mean that sometimes it won't work out? Of course it's going to work out once in a while, but it's really not a good idea because any flush down is going to keep going. And that becomes problematic. You don't have a good spot to put a stop. Your stop is right in the middle of support, where they can flush it down to get more contracts, and they at least go down here and they're testing that level. Okay. I'd be on my hands, says Brian, higher low than lower high, and the 30-minute isn't telling me either way. The ABC idea is one I hadn't thought about. That's useful. Yeah, and so now you got a bit of an ABC. It's kind of a crappy ABC here. Now I'll go long. You'll go long on this? No, you won't. We won't let you go long. This is not a place to go long here. First of all, we have the low of the day right here. And we're not there yet. And odds are pretty good that this is going to flush into this. Okay? So I wouldn't do that. I mean, you're just begging for trouble to do stuff like that. Unless you've got a big account and you don't care if you get way underwater by 5, 6, 10 points. But I'm not that kind of a trader. You don't want to be jumping in and out of this market. You want to wait until it tells you to pull the trigger. And look at, if you had gone long there, that'd be the second stop out that you'd have on that trade. Okay? So now we come down and it looks like we're going to try to spring this again. Yeah, and down waves are larger than up waves. Yeah, you've got no reason to go long in there. I need to do more mindfulness for sure. I would say so. Okay, so we got one bar here that is, I can move this over, right? Notice our 30-minute bar again. Here was our resistance point. We broke through it. And notice too that almost all the time when we break resistance, we do so with some strength. So this is supply in here, okay? And so we want to be aware of that this vertical acceleration down has some supply to it. 30-minute down suggests follow through to the downside is likely. Yep, very possible. So we just want to be patient in here. Can we look at the daily? Yeah, the daily's right here. We're underneath the daily, yesterday's low. Okay. It doesn't look like a good long. Yeah, the daily is suggesting not a long trade here. It feels as if we're going to fall. Okay, let's see what happens. Yeah, this is not, we wouldn't be, if we look at this, if we think about this from a 30-minute perspective, right? We had negativity yesterday. We couldn't get above it. We've come down. We saw supply come in here. We tested it, right? And now we see this moving down again, some supply coming in here. So is this market going to break further to the downside? And right at this moment, it looks like it will. Okay? Let's see what happens. Keep an eye on the 30-minute and the 5-minute. What is this doing? What's this market telling us? Here we go at the end of the bar here. What is this suggesting? Go long now, says Dean. Why would we go long in here? And Brian says long too. Cluster of closes on the 5-minute, 30-minute bag holding, 30-minute shortening of the thrust in here, right? And holding this reverse use of trend line. No net progress to the downside on the 30-minute, right? And look, we've tried to come down. We had chances, didn't we? We had a chance to go lower here. Okay, so there's support. We rally up. We've got a chance to go lower here. We don't do it. Okay, we rally up into resistance. We get a third chance here to go down, and it doesn't. It bobs right back up again. So when that's happening, we've got shortening of the thrust here. We have increased volume, or a little bit more pickup in volume on this 30-minute bar than we did on this 30-minute bar. That's the volume here. And we're not going lower. We're holding in here, and we're holding against this reverse use of trend line. It's worth a long trade in here. Okay? It's worth a long trade, and we want to see it take off pretty quickly. Shaking people out, tiring people out. Well, there's people selling, there's supply, but look, there's not really a lot of supply down here either. The market's kind of gone dead to the downside. Hasn't gone up either, but to the downside, it's been kind of dead here. So let's see what happens with this. Coming down again. Is maybe this time it going to break? We would be very, very careful watching this. But that second 30-minute bar just completed. Again, the same amount of volume, and again, no ability to push up. Poor closes, no question, but when we look here, maybe we're making a higher support. Let's see. Heart pounding, but holding the trade though. Yeah, well, it's just another trade, right? Okay, so now, where might this go to? What's our target here? 1706, okay? 1704. Yeah, remember we've got this access line in here. That might become significant. And then 1706 we said, right? So we'll put that into. Let's see what it does. We're up over this resistance now, so this should no longer be a concern to us, right? Now we put our eyes ahead to the next level in here. No real demand though, is there? But we have more upside, more movement up, and all of this just hanging in here with going nowhere. So we would want to think about this market going up, not down. Going a little deeper into this. And a little bit of supply coming in. So we want to watch this carefully now because we're getting more supply than demand. And this may fail on us, right? Move stop up to break even. Sure, you could do that. See if it can get up above this. Now it does, finally. What do you think? An ABC waiting for the C and then I'm out. Yep. Well, you got, that was it. This is it right in here. Yeah, this is a good spot to take it off. Notice we've got that ABC in here. That pulse, pullback pulse into our access line, and this is not a nice little trade. You want to be nimble and quick and nimble on days like this. And now we're having trouble getting over this. It's only 3 o'clock. See if I can get that correct. There we go. It's a nice feature of this. You can hit the control key and it flattens it out for you. I used to spend minutes trying to get it correct on TradeStation. This is so much better. So now we've got a bit of an upthrust in here. All right. Not much demand. We had supply in here. So an aggressive short right in here, right in there. As it came up and tested that level, then fails, you can short it mid-bar. Worth shorting at the supply line on the 30-minute. Yep, exactly. Right, you've got that too. Sorry, I forgot to put that down. Absolutely. Let's get rid of this. You've got that. So where would we anticipate this market going to again? Back down to yesterday's low, right? Maybe the low of the day. Let's see if we can get down there. So somewhere in here, you take your trade off. It's now, what time is it? 5 minutes to. So you can take it off at close. There we go. That's the close right there. That's the closing mark. So you get a small trade out of that. Not a big one. None of these are big, and that's why you trade small and not large on a day like this. All right, so let's just do a quick recap here. We have a spring situation set up on the daily that comported to a shortening of the thrust, reverse use of trend line on the 30-minute chart. Actually, before that, we saw some supply come in on the 30-minute chart in here, and we took a short in here. That came down to this point. Notice how the market tends to spike. We don't get long drawn out testing and what have you, typically on a market like on a day like on a rotational day. They're generally spiky, and they happen in one shot. And so that's exactly what happened here. We get a push up, we lose demand, we have a little up thrust. This happened to be in an area of prior day's supply. Had a couple of opportunities to short this. It makes a lower high after coming overbought and no supply down in here. We watch the market go back up into, what is this? Oh, I put that in afterwards. Let me get rid of this. Back up into supply here. We see weakness come in. This was a nice little ABC up. Couple of opportunities to short this. We come down here. We talked about buying this on a minor support, but that's not a good idea because we have much stronger support down below. We want to wait for that. And even then, we weren't that keen on buying this, even though there was no demand in here, because we were coming down and the 30-minute had an increase in volume coming in, and we weren't sure how that was going to play out. It became obvious, however, after a fashion that we tried to go down 3 times, maybe 2 or 3 times, 3 or 4 times here, and then the market rallied up. It did come down in here, but that was just a test, and then we come back up into a lack of real demand up in here, and another upthrust situation, ABC again into an access line, and we get a small little trade at the very end of the day. And also that access line happened to be on the supply line of the 30-minute chart. Tough day trading, yes, it was a tough day trading, and very common in the S&Ps lately. We don't have the volatility we had, and volatility ebbs and flows, and you want to be able to know what kind of day we're in as best we can. And that was the other thing. By noontime, we said, gee, we're in a rotational day, or the middle of the noon hour. We knew we were in a rotational day. And so that's also plays into this. When this market wouldn't go down, it just confirmed that we're still in rotation. And so therefore, we're not looking for big moves out of this. We're looking for small moves, 3-4 points at a clip. And so we want to pick our spots carefully in order to, and most of the time, we're going to get sort of spiky kind of spots. I mean, there's always a second chance to go in, but typically the high will be put in and then it gets slammed down. This is a little bit more unusual, but we know how to read that. In the summertime, usually slower than most of the year. Yeah, the volatility contracts, but this is November. This is a November 19th in 2013, I think the day is here. Lots of reversals and small trades. Brokers would be happy. Well, and good traders are happy on these kind of days because even though they don't make a lot of money, they wrong foot a lot of people, and it's easy to buy at the lows or the highs and get in. Good to practice this kind of rotational day. They're so common and can be so tempting to look for lower odds plays. I always have to remind myself just to stick to the edges. Yeah, absolutely. And this is all about edges here. All about edges. You know, we've got a spring, 2 springs really, but one that just wouldn't go down. 2 springs, 2 up thrusts, and a fading inability to rally above on an ABC. And ABCs play out quite a bit on these days. Another thing to learn about. All right, so let's take a quick look. If there's any other questions on this, if not, and if there are, let me know and we'll come right back to them. Take a quick look at the current market. So it was only 2 days ago, and so this resistance area still holds, this line going up, this reverse use of trend line. And I might even adjust it down to be a little bit more conservative. Yeah, I think I would adjust that down like that. So drop this down a little bit. Not too much, though. So last week we said we would, or last two days ago, we said that probably just flush out this low and then come back up, but we mentioned this low could come down. We don't want to see it close below that. I was sort of surprised to see it come down this low, but it did, and it flushed down, and look at the volume that came in on that. More demand. So every time this market's dropping, there's buyers coming in. And then today was not a great day, but an okay, upside day. And I just anticipate us continuing to move on up and break and put in a new high. But finding some resistance around the 2200 level. That's I think the next level that we're looking at here is 2200. I'm sorry. 2195 to 20, yeah, a little bit less than that. 2195, give or take. But somewhere in there. All right. You learned a good lesson today in minor and stronger support. It took me a long time to learn that. I would buy those minor supports when, the major support was just a couple of points down below and always get hammered on it. It took me a long time to learn that, but I finally did. So I'm happy to convey it over to you. All right, everybody. The ABC on a range day. Yeah, that actually, it's not so much my idea. That came from Bill Wolf on his Wolf Waves. Was there a Wolf Wave that's set up on this day? No. Yeah, one did, but it failed. But there's one, let's see, 1, 2, 3, 4. Yeah, well, this would say there's one that's setting up here. I haven't done these in a long time. But he always talked about the ABC as being a useful... No, I actually don't see a wolf wave here. Do I see a down wolf wave? 1, 2, 3, 4, 5. That would be an up. 1, 2, 3, 4, 5. And this would be an up. Yeah, I don't really see a wolf wave in here. But he always talked about the ABC stuff. Anyway, hopefully that was useful. And have a great weekend and a great trading week. And I will see you next Thursday at the usual time. All right, everybody. Have a good one. Take care now. Bye-bye.